Good morning, everybody. Welcome to the Trading Market Technicals morning call video for Tuesday, October 16th. Had a nice big update today. Markets actually gapped up, sold off a little bit early on, and then kind of grinded higher into the close. Believe it or not, I don't know about anybody else, but very quiet day for me and a lot of other people that we interact with during the day. Just a very, very quiet day. Didn't see a lot of volume, didn't see a lot of movements in a lot of stocks. Some of the coal sectors actually really picked up a little bit today, which is encouraging for me because I keep telling you guys I love the coal sector, and I think we're going to get a couple of big plays out of it. Let's run down the numbers. Dow Jones up 95, S&P up 11.5, and the NASDAQ up 20. So risk was clearly on this morning. Kind of rolled over into the European session. And what we have here, and I've been bringing this all out to you guys, is that we just have a bunch of mixed signals. Despite a lot of these investor concerns and a pullback we've had for the last several sessions, we stopped basically right at the 50-day moving average in most of the big benchmark indexes, especially the S&P cash. And if you take this trend, this uptrend channel that we had in, let's call it the double top / head and shoulders, if you will, you're looking at a $1,500 price target, and that is absolutely attainable by year's end. I wouldn't see why not. The Fed's pumping $40 billion a month into the markets, and there is just a huge bid underneath it. So I don't see the market selling off unless there's some sort of a huge catalyst. I do see some sort of a correction, but we've literally every time we've traded lower, it's been literally less than 1%, 1% or 1.5%. So nothing really substantial about a pullback. But if you start digging under the hood, and this is where it gets interesting, the market internals, the breadth of the market, are less encouraging than what the S&P is doing. A lot of the NADD, which is the NASDAQ Advanced Decline, which I'll show you in the charts, is making lower lows. Totally becoming apparent what's going on. The advanced declining issues have stalled up at the June lows. And our New York Stock Exchange Summation Index, I had mentioned to you on Friday, the weekly summation index went on a sell signal. And as you know, we have rotation coming out of tech and into a lot of the safe haven. Although risk was on today, so a lot of the sectors like the JNK, the high-yielding bonds, they were up, the home builders were up, which I'll show you real quickly. But we have mixed signals, so we want to be we want to be nimble, but we also want to be cautious. And these are the times that I really, really, really hate, unfortunately. But this is what the market gives us. So we don't want to be we don't want to be totally risk on. Even if the market does happen to move and explode a little higher, I'm fine with that. I'm looking for longs during the day. Whatever the market is telling me to do is what I'm doing. I'm just not looking to hold into any type of environment in this. I wouldn't want to be holding into this type of environment unless, obviously, if it's a long-term investment. That's not what we do. But just use caution, because at any given moment, something could happen and out of Europe, and that's it. The market's down 30, 40 S&P points. So please use caution during the day. All right, we'll get into the charts. Copper. Now, copper, a lot of the miners did well. Copper is holding its own. As you can see, it's above the 20. And this 50 and 200 looking for a golden cross. Hasn't happened yet, but we are basing at the lows on the stochastics. Our copper S&P ratio, as you can see here, kind of rolled over a little bit. We did have a little bit of sell volume, so a little bit of distribution. But it'd be interesting to really see what happens in the coming days. So a lot of things to look at intraday, and of course while you're looking. While you're trading during the course of the day, and if you are looking to put on some positions. But that's something that I'm not looking to do at this time. But nonetheless, if you're looking at a couple of good trade setups, 2 or 3 will make your day, will pay the day. All right, now that's copper. Let's take a look at the breadth of the markets that I've been mentioning to you. NADD, advanced declining issues. Okay, this is not healthy, and of course, if you really want to get aggressive, you want all our indicators pointing in the same direction what the market's doing, and then we can be aggressively buying dips. But unfortunately, this is telling me not to at the moment, so that's what I'm doing. I'm just using caution. Not that I'm looking to go short the market here, but just again, guys, my job is to point out what I'm seeing. NYAD advancing declining issue, as you can see here, stalled right up from the June lows. Again, not really what I'm looking to see. VIX, just a mess, literally just a mess. And I drew this line here last week, above 17 and really above 19 will really get this market going to the downside if you're a bear. And if you're not, this chopping around here, just creating a huge, huge base here is really what you'd want to be looking for. Now, put call, totally dumped yesterday. Well, 95 points. So it just seems to me that the money managers and the hedge fund managers are really just okay with what Ben Bernanke's doing. And they are basically fearless that anything is going to happen because the Fed's going to be by their side. So nobody's buying insurance, and that's really what that comes down to. Down at 77, I mean, it's just really low. We're at the lows here, but that also marks extreme complacency. So to me, that's a word of caution. I would definitely be using caution here. Index. Let's take a look at the S&P cash, and as you can see here, if above 1480, that little double top area, we held this trend line, and this is from I believe it was a day ago. This was 2 days ago. I'm sorry, yeah, a day ago, and I wanted to show you guys here what transpired here, that we stuck to this area, and now we'll go look at the other charts and we'll see what happened here. Now, risk on JNK, high yield and ETF, junk bond ETF, risk clearly back on again for the day, as you can see here. XHB, the home builders, had a big day, big move, really in this channel. But again, guys, risk definitely on today, and we did a big move up early on. We sold off, and then we just kind of grinded higher all day today. Very, very low volume, as you can see here, very low volume. Now let's get into the TLT. As you can see, we did break back out of the channel, and we're just kind of back testing it. If the TLT can get back into this downtrend channel and start to trend lower, making lower lows, and I'll just show you this other chart here, while the SPY, and this is the uptrend channel, this is that lower trend line of that rising wedge, which never materialized, as you can see. That just turned into a channel. Here's that head and shoulders. We just stopped right at the neckline. Look what happened, right back up again to 50-day moving average. So if the TLT could come in and the bonds start to come in, money's going to go right back into stocks. So they 1, 2, 3, 4, 5 days down. Hey, that's enough. They're going to look to bid back the market. And 1,500, you have 150 right up in here. So 1,500 in the S&P is definitely attainable by year end. I personally would like to see the market roll over a little bit more, maybe correct down to this 1380 in the S&P cash. Spiders will be right around 138, so that's something that I'm looking for. 15-minute SPY. I just want to show you that big area, that volume profiles, big thin zone. We did crack it, but we got back in it again, so we're going to look to see if this thing starts to roll back over again in the S&P and the spiders. And I mentioned yesterday, that watch the diamonds, watch the Dow. We're sitting on the 50-day moving average, and we have this long-term uptrend line from June. And look what's happening, guys. It literally took off like a rocket ship yesterday morning. So this is something that, does it have legs? Does it hit the 20 and roll like Apple did? Or does it have momentum and it can really start to move a little bit higher? So let's take it again one step at a time, but I'm liking the price action really to the upside for today. At least today, one day doesn't make a trend. Transportation sector looking a little bit better, looking a little livelier, right? We're above the 20. We are below the 50, so we're sandwiched in between here. But our indicators are starting to turn up here, which is a nice sign, our momentum indicators. And we're going to need a little bit more work. Really want to get back above 90.46 in this IYT, which is the transportation ETF. And then we'll look to really see if we can get some momentum to the upside. This will no doubt help the equities markets. IWM, Russell ETF. As you can see here, same thing. Nice big move lower. We just got above, literally just got above the 50-day moving average by a few pennies. But nonetheless, a nice reversal day, nice reversal candle. Let's see if this has momentum and has some legs to the upside. Again, guys, we could bear flag right up into here again and then really sell off again. So that's the word of caution that I'm using. We are coming out of seasonal weakness, so keep that in mind. Got another week of this, which is options expiration. And with options expiration, what usually happens? Low volume, drift higher, and usually the bearish days are in the beginning of the week, and then we usually get some good follow through come to the end of the week, because a lot of these writers of puts and calls, a lot of these big funds and institutions want them to expire worthless, so they'll kind of hold the market in and see where the max pain is. So really, just be on your toes. Don't look to really short the market if you really don't have to. So just use caution here. Getting closer towards the end of the week, we usually get some bullish days here, whether it be like Wednesday, Thursday, and then Friday could be a wash day. But usually Wednesday, Thursday, look for some bullish days coming in. SMHs, all right, a little bit better than before. Needs a lot of work though, as you can see here. So money is rotating out of technology and rolling into other sectors, and that's fine. And that's what we want. We don't want money coming out of the market in itself, and people selling good positions, and then the market starts to really take a tumble and start to sell off. Although we could use a little bit of a sell-off here to look to buy into this market. Apple touched that again, right to the penny. This trend line, I could see that everybody's watching. There's really no change in Apple here, but I don't like the fact that it didn't take out Friday's high. So use caution. Apple is still very, very weak here, guys. Again, I don't trade it. I wouldn't recommend buying it or shorting it in this area. I'd like to see this market. If you are going to buy it, really, you'd be buying it right at the 622 area. Have a $2, $3 stop, whatever is to your risk tolerance, and then take a shot from there. But for me, personally, Apple down so much, I wouldn't look to short it. I'd like to see this thing bounce back up again, make a higher low off of this low, and then buy that low. I just like a little bit more confirmation. Last chart, guys, Q's Daily, really the same thing. Really not much happening here other than the fact that we're looking for a little more momentum from Apple. That's going to help the Qs. Guys, we have a slew of earnings coming out this week. Pay attention to the earnings, and if you are holding something, please look it up. You don't want to be holding into any type of earnings. It's a 50-50 shot. It's a losing game, a losing proposition. All right, have a great day, everybody, and we will talk to you tomorrow. Take care.